JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 7th of April 2021. So yep, welcome everyone. Welcome to this Wednesday's afternoon session where we're going to have a very quick look at the markets, a few of the charts. We'll have a look at a few charts that we looked at this morning just to see how everything's getting along. There are a few interesting ones. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the charts, the first one I want to pick up here is the German index DAX, and yep, everything's kind of working out according to the plan. So the plan, if you remember this morning, I said to you guys that my plan is wrong adjustment here. Just bear with me one moment. So the plan here was to wait for a drop below the 15,210 territory right here in order to get a little bit more excited with, let's say, further declines, because in a way it was kind of indicating that there might be a bit of a corrective move here lower here. And yep, you can see that this is exactly what's happening. We got that drop below the 15,210 zone, and now we're drifting lower. We're below that 15,200 zone. So let's see now where this is going to end up going, how far to the downside this is going to end up going. But for now, yes, I'm leaning a little bit more towards the downside as long as the price continues to stay below this 15,209 territory right here. If it climbs back above it, then maybe we're not really done with the upside yet. However, still in that case, I would still prefer to wait for a push above the 15,312 territory right here, which is the current all-time high, in order to go for some higher levels. But at the moment, as I said, keeping an eye on the 15,210 zone. If as long as the index remains below that area, there is a good chance we could see maybe a drift further south, maybe towards the 15,111 territory here, or even below that, but I'll pick up on this tomorrow morning. S&P 500. So you can see here the picture. It's quite interesting, I would say, because it kind of ended up being flat yesterday. And if we take a look at the cash index, oh, and by the way, if you remember what I said to you guys this morning when I was covering the S&P 500, that if we get a drop somewhere below this 4,068 territory, then this could also result in a bit of a corrective move here to the downside, where our next target could be this 3,984 territory, marked by the high of the 17th of March. So yep, for now we're just monitoring this. Of course, the cash index is supporting that idea, this idea of maybe seeing a bit of a corrective move lower, because the price is currently not far from this hurdle, this 4,068 zone. Currently the price is trading near the 4,070. Yes, it's still slightly above it, but we're very close. Let's see if something similar will happen as with the German DAX today, where we've managed to break the low of the previous day here, which in our case here is this 4,068. So let's see if that happens here today. Jumping into silver. This one's drifting back down, and of course all this now is kind of creating this little difficult atmosphere. So on one hand, it wanted to push higher. You can see that we've tested this downside line taken from the high of the 1st of February. But we're now, after we've tested it, we're now drifting a little bit lower. However, if you remember, I talked about this commodity already recently and said that if the white metal here drops below the 24.84 territory right here, then yes, we could see a bit of a maybe decline here back towards this 200-day EMA or even below that. But if it stays here above this area, although it could remain. Let's say, although it remains below this downside line, but let's say struggles to move below this 24.84 territory, this of course also doesn't really help the bears very much as well. So that's why in that case we will just remain let's say a bit on the neutral side. For the upside, I need to see a push above the 25.46 territory right here in order to get a little bit more excited with the upside, because at the same time not only we would clear this key area of previous support and resistance, but also we would push above all of the EMAs here on our daily chart. So keep that in mind. Now jumping into Bitcoin, and here, look at this. I mean, beautiful move here to the downside, and not to mention Ethereum and Ripple, to which I'm going to get into a moment. But Bitcoin basically is drifting lower. It's dropping back below this 21-day EMA. So in a way, there is a bit of bearishness kicking in here. However, don't forget that we're still above some of these upside lines, and in a way, like say for example, if this upside line stays intact, this one's drawn from the low the 27th of January, then yes, another reversal here and another move higher could be possible. However, if this upside line gets broken and the rate falls below the 54 mark right here, yes, we will go for some lower areas, but we'll still class this move as a temporary correction if this upside line drawn from the low the 11th of December remains intact. So keep that in mind, guys. Let's see, like I said, let's see how this is going to play out near this this shorter term upside line right here, taken from the low the 27th of January. But for now, it is leaning a little bit more towards the downside in the very, very short run. However, again, we need to see what's going to happen with this upside line. If it holds, a nice rebound could be possible. But if it breaks and we see the rate falling below the 54,000 mark, then, well, we could see a larger correction here to the downside. Ethereum. So, if you remember yesterday, I talked about this little pattern here, which could be, and yesterday, and I've mentioned the same thing this morning as well. I've mentioned this pattern, the so-called bearish three, and when you have the, let's say, 3 consecutive candles here, the bodies of these candles are not the whole range of these 3 bodies is not really more than this initial kind of decline, which we can even call it as a prevailing trend here. So on the very, very short term perspective, of course, not on the daily chart here. But long story short, guys, this is working out, and it worked out perfectly. We saw a drop, and then what I said to you as well, that if you want to be a little bit more on the safe side, you could wait for a drop below this 1981 territory right here, and wait for the daily candle to stay below it. If it stays below it, then yes, we could go for maybe a further corrective move here to the downside. But if it doesn't, maybe we could not, well, maybe we're not done with the upside, because if, let's say, this area here, this 1981, the area approximately around there, if it provides good support, then maybe this could reverse back to the upside here and basically just confirm a nice little range here. But again, like I said, let's not get ahead of ourselves. let's go step by step. I'll definitely pick up on this one tomorrow as well in my morning espresso at 6 o'clock GMT time. So yep, but for now, guys, we're all keeping a close eye on this 1981 territory. If we see the daily candle remaining today below this, then yep, we could go for a bit of a further kind of corrective move here lower. Ripple. So, as I've mentioned this morning, guys, this barrier right here, the 0.8315, I've mentioned this level today, and I said that if the area around it does provide good support, we might see a nice reversal here and a pushback to the upside. Let's see if that's going to happen. For now, yes, we're seeing that nice, good corrective move here lower. Can it continue going deeper here? Well, I mean, we'll just have to wait for this one. But if suddenly, let's say this starts falling, let me just grab an arrow here. If this one starts falling below this highlighted area here, which I've previously talked about as a good area of resistance, if now it could take the role of support, and if this gets broken, then of course, yes, a deeper move to the downside could be possible, guys. So keep that in mind. A quick update on AUDUSD. So I talked about this pair the beginning of this week and last week as well. Basically, we are currently still within this falling channel pattern since around the end of February. However, we're struggling with this key support zone near the 0.7557 mark, and this the highlighted one here. And as I said before, we need to see a clear break through this one, and not only a break but also a daily candle remaining below this area, because as you can see, we had the break here, but it was a bit of a false breakout. So long story short, if you want, yes, we are still within this falling channel, but to be a bit more excited with the, let's say, the downside here, further declines, then yes, a drop below this hurdle would be needed. USDJPY, and yeah. Oh, and by the way, quick update here on AUDUSD. Also keep your eyes on the equities, because those currently are in a bit of a sliding mode. Keep your eyes on this pair as well, because if equities start drifting further south, guys, I mean this could definitely shouldn't be probably using the words definitely, but this could potentially drift a bit more to the downside. Let's put it this way. USDJPY. So something that I've mentioned as well, and yep, I've mentioned this one yesterday, if I'm not mistaken. But long story short, the upside line here, the one that I talked about, the one that is drawn from the low, the 23rd of February, got broken. Now, we've also managed to drop below this 109.85 zone. So in a way, everything's kind of pointing a little bit more towards the downside. Now, again, you can see that today we had a bit of initially we had a slide, but then we recovered somewhat, and now we're currently stalling near this 109.85 territory, and it seems like it's acting as a good area of resistance. If this barrier continues to provide resistance, of course, then yes, further declines are possible. And initially, we'll target this 109.23 territory, which is coinciding with the 21-day EMA, and then from there we'll take it further, because if it drops below this, then yes, further declines are possible, and maybe, just maybe, we could see all this area here. Let me just put this one on the chart. Again, maybe I'm getting ahead of myself here a little bit, but just maybe we could see this one as a potential kind of neckline of a possible head and shoulders pattern. But again, like I said, I'm probably getting ahead of myself here. But let's see, of course, how this is going to play out. For now, let's keep it short and simple, guys. Here, the 109.85 territory is providing good resistance. Also, something that I wanted to show you very quickly is probably on a 4-hour chart, but we might, just kind of depending on how you're going to draw this, we could see maybe a possible bearish flag, or a kind of a bearish pennant here. But again, like I said, it depends on which charts we're looking at. But again, something to keep in mind. But probably let's not overcomplicate our lives here. And let's just keep an eye on this 109.85 level, which is, by the way, the highest point of June of 2020. GBPCHF, also quick update. This is what I talked about this morning, and look at this beautiful move. So the idea basically was straightforward. When I last time looked at GBPCHF, I said that if we suddenly start dropping back below this 1.2966 territory, then yes, this could open the door towards the 21-day EMA. But if the pair drifts lower and we see the daily candle remaining below the 21-day EMA, then this, of course, could attract more sellers, and yep, we could see a move towards this key support zone near the 1.2790 territory right here, which, to be honest, we're just shy of a few pips right now of hitting that, and yeah, that's basically, I would say, a good result, good achievement. Now we could even actually see a drop below this a little bit, because we have a nice upside support line here drawn from below the 11th of December, and yep, we could see a drop below this 1.2790, even testing this upside line. But let's say if the daily candle suddenly still comes back above this area, above this hurdle, then, well, maybe we're not really done with the upside. However, again, it would still be very tricky for me probably to get back to, let's say, examining higher levels. Well, I would like to see at least a push back above the 1.2966 territory, or even better, the psychological 130 zone could do the trick. But like I said, we could start looking at some higher levels, and for me to get a little bit more comfortable with that idea, I need to see a push at least above the 1.2966 territory right here. But for now, all eyes are on this hurdle and this upside support line. And finally, EURUSD. So this one is, well, let's put it this way. It pushed higher. This is what I said this morning, guys, that if it pushes higher above this 1.1881 zone, this, of course, yes, increases the chances for a further move north. However, I would prefer to see a daily candle staying above this area, above this hurdle, above this barrier, in order to get a little bit more excited with higher levels. But at the moment, I'm not really getting that. So yes, we had a bit of a break here, breakout, but as you can see, the bears kind of pushed the rate back down. So yeah, that's why it doesn't really help many bulls here. That's why I would, like I said, we'll play a bit of a waiting game here. Of course, on the positive note is the fact that the pair is now trading above this key barrier. This 1.1834 is trading above the 200-day EMA, above the 21-day EMA, but it still needs to climb higher in order to overcome this 100-day EMA shown as the green line. So that's why I'm being very careful here, because I want to see if this 100-day EMA is not gonna act as a good area of resistance. But again, let's wait and see. For now, if you want to kind of, let's say, examine that option, that scenario, if this is going to act as a good area of resistance, this 100-day EMA, then we would still need to see a strong move above this 1.1881. We'd like to see the daily candle staying above it in order to, like I said, go and test the 100-day EMA or even slightly higher levels. But again, like I said, for now, it's a bit of a waiting game here on EURUSD. Unless the pair suddenly sharply falls back below the 200-day EMA and below the 1.18 territory right here. And let me just lift this arrow here a little bit. Oh, not like this, but like this. That's where we could, start maybe looking at the downside again, but this time I will just aim for the lowest point of March near the 1.1704 territory, and then we'll take it from there. So guys, that's it for this session. I hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, guys. I really appreciate your views, your likes, your attendance here, yeah, guys, if you want to catch me tomorrow morning, as always, my Traders Espresso, 6 o'clock GMT time, we'll have a look at some of these instruments, some new ones, and then we'll take it from there. So have a wonderful evening, stay safe, and bye for now.